Hello everybody, my name is Craig Bennett, and today I'm going to get into a video on when is a proper time to buy gold. And what I mean by gold is gold, silver, platinum, things like that. And also when's the proper time to sell it. Now before I jump on in there, I want to mention with yesterday's video, it's best if you take a look at that. It's also into the stock market. It's talking about corrections and what would I call a correction. And there's a few predictions for that was going to happen today and on Monday. So what I predicted was 100% right, and it was even better than I even thought. However, the market went up too much today, so there's a little bit of a problem. I have to make a slight change on what's probably going to happen on Monday. So Monday, I said that we're going to have a just normal trade day. It's going to be a narrow correction. It's not going to be so for those of you who don't know, today we broke a new record as far as the markets. They've never been this high before. This has been done 50 times this year so far, where it's broken one record after another. And keep in mind, there's only 12 months in the year, and we're only on the 10th month. So that's quite a significant thing that's going on right there. But because it's broken a record, here's what's going to happen. If you don't already have stocks, then Monday might be a good time for you to buy. However, if you already have stocks, don't worry. The correction's not going to be significant. So at least in my prediction. And keep in mind that what I say doesn't have any guarantee behind it, so trade at your own risk. I have to legally say that. What I think is going to happen is Monday, what's going to end up happening is given that there's nothing happening on a weekend, because there's like North Korea launches a missile at us, and it actually does blow up and causes nuclear war or whatever. Just sell everything and invest in gold. I'll explain a little bit more on that in a second. But given that there's nothing major that happens over the weekend, then what needs to happen is on Monday, sometime midday, it might be 11 o'clock, it might be 12 o'clock Eastern time, but sometime on Monday, there is going to be a bit of a dip. I don't know exactly when, but what I think is going to happen is, depending on the company, some companies might actually not recover. It might basically go down a couple points and just never go up above. So keep that one in mind. But in the overall market, about somewhere in the midday, if it doesn't already start out below what it ended today, then it's about somewhere midday, it's going to drop a little. It's just going to dip, and then it's going to slowly curve back up. It's either going to end above what it ended in today, it's going to end above what it started at Monday, or it's going to end slightly below either one. So note that. It's not like a major loss, if there is any loss. Also, it's not a major gain unless if you buy at the lowest point, then maybe. But with that one in mind, each company is different, so also note that. So with the overall market, what I think is going to end up happening is it's going to be a correction, but it's not going to be like a major correction. Yes, the market went up quite significantly today, but note that the prior day it went down a little bit. So with that, it's going to go up in either Monday or Tuesday. It's going to go above, and then it'll be normal. Towards the end of Monday, it might become more normal after 1-2 o'clock Eastern time. It might be somewhat normal or getting to normal, and Tuesday it's just going to be a normal day. So just note that if you want to buy, again, there's no guarantee on this, but if you want to buy, Monday might be your day just to get into some stuff. You're not going to see what we saw Thursday though, so note that. You lost out on that. That's just not going to happen. So with that one in mind, just note that. And if you got work or whatever, do trailing stops and stuff like that, and just in case. And and do a trailing buy. So you don't miss out on anything one way or another. So as far as that goes, let's jump on into the gold. What causes gold to go up? From someone who's autistic and can read patterns fairly easily. What causes gold to go up? And when I'm talking about gold, I mean silver, gold, copper, platinum, whatever. What causes it to go up when the stock market goes down, and vice versa? Well, the simple fact is as people in the United States, but more so than anywhere else, but as people either worldwide or in some of the massive countries, being the United States or one of the others, as there's more distrust, gold prices go up. So the thing to note is you'll notice that dollar amounts and gold prices are a great reflection to see if the government is doing its job well. If the dollar, so euro, yen, or dollar, or whatever it may be, if it goes up and the gold prices go down, then that means that there's more confidence. If the dollar goes up at all, there's more confidence. But if the dollar goes up and the gold goes down and it's a significant amount, then, and it doesn't have to be a mirror image, by the way. It just has to, be there. Any idiot can say something is significant or not. But if it's a significant amount, then basically, the government's doing well. If it's the other way around, the government's doing bad. So this is something to note. And a lot of investing has to deal with feelings and people's perspective. This is very, very important, because as people are more confident into the government, whether it's job security, housing, food, and so on, as more people are confident in these things, and the government itself being wars and whatever, wars tend to not really reflect it as much as housing, job, and whatever, because most people, especially here in the United States, doesn't really get pushed into war unless it's something like World War II or Vietnam. But it's important to note that the more uncertain people are, the more gold will go up, and silver, gold, whatever, and the more stocks will go down. Simple as that. So here's some real world examples. I'm just going to point out a handful. Otherwise, it's going to get way too controversial, way too quick. But I got all the way back in the 1980s to now. I'm going to really focus on 2000 to now. So as far as that goes, one thing to note is in the 90s, late 90s, we done with wars. Desert Storm was done, and whatever it may be. So we're done with wars, and the gold prices go down. People have more trust. People were able to buy things like crazy. They were able to do a lot, and they were able to basically they were able to not worry so much. But 9/11 happened, and then on top of that, we went into a war with Afghanistan and Iraq. And I think if it was just that and that alone, you wouldn't see like a massive hike. Then this little spike right here, that's when investors started realizing the housing market was screwing up. So about, and really it's around the 2003, 2004 time they started noticing it screwing up. In 2006, 2007, the media started hinting at it, but a lot of it was denying it, especially the government was denying it. And then 2007 onward, they started admitting it. And by 2009, 2010, the media fully admitted that you had a housing problem. So that's where that spike came up. Basically, the housing market collapsed into itself. People were worried about losing their homes. People were worried about losing the value on their houses. People, there was things where people were making every payment they had that was on their bills and whatever, and still was making every payment, and then the bank foreclosed on the home because they legally can. So the bank resold it and whatever it may be. So there's stupid things like that where people were worried about losing their homes. And then you had people who lost their jobs, because when you got people who's worried about their homes, they're worried about their jobs, they can't really focus as much on their jobs, and so on. Anyways, I can keep going up and up, but this video is already getting long enough. Basically, when we get around this age, again, there was 25% of minors were living in poverty. Some were living in vans and whatever. So it was pretty bad. So the more uncertainty people have over their life, the more uncertainty people have over the government, on the government taking care of them, helping to push companies to provide jobs, helping with home, helping with security. This goes up. Keep in mind, the average person is not investing into this, because the average person average household today has less than $400 in their bank account. So, and that's household, not per individual. So an average person is not investing into this, but the person who actually does have money, they got to protect it. There's a reason why people don't have jobs and whatever, and the company might be closing, so they're getting spooked, so they have to put in something that will make money. And if the government does collapse, then chances of us going back to gold would be fairly high, gold, silver, whatever. But anyways, as far as that goes, hopefully it's helped you out. So again, something like nuclear war or whatever, go for gold, go with precious metals and stuff like that. But other than things like this, corruption doesn't even really bring it up that much. But it's mostly the uncertainty and things.